So if you've been involved with the stock market for a while, then you know that it takes a good understanding not only of the markets, but of human emotion as well. However, that's kind of easier said than done, especially when you think about all the things going on like work, family, school, and all the other responsibilities we have. Finding consistent candidates to trade can be extremely challenging. So in this video, I'm going to break down some of the tips and strategies to help you find the next big move, no matter what season of life you're in. Coming right up.
Hey, what's up? Rob here with Wealth Builders HQ, where we bring you the best tips and tools for building your skills to develop wealth for today and well into the future. And on this channel, we do a lot of stock market analysis for long and short term, as well as recaps just like this one. So if you're new here, consider subscribing. Now, one of the questions we get most from our Wealth Builders HQ community is, how do you look at where the stock market has been and determine where it is headed? So we have actually put together an entire free live training workshop that is all about finding the best candidates for today's market. And there's a section for the community, you, to bring your stocks to the event and have me analyze them for you in real time. This free workshop is called Power Hour, and it's taught every Monday live online at noon Eastern Time. I'll leave a link to it below in the show notes.
So let's start this week off with some economic reports. So we've got a couple of them coming up this week. You can see the Fed chair speaks again on Wednesday at 4 p.m. These are all the high impact reports that are coming out this week. And speaking of Fed chair, they did speak last week, guys. And what happened? Right on Wednesday, they raised interest rates from 2 to 2.25%. May not seem like a whole lot, but this makes the third raise this year and another one pending in December. They're talking about somewhere between 2 and 4 increases next year. Every single Fed chairman, for the most part, believes there should be an increase, and they are split between that 2, 3, and 4 for next year. My personal opinion says we're going to see another full point next year. We should be at 2.5 by the end of this year, 3.5 by the end of next year, unless some of the economic conditions change. We're looking at continued increases. Increases in interest rates are usually the signal before the market crashes. So just as an FYI, something to keep your eyes on. All right, now as we go and take a look at earnings, again, we're not in earnings season yet, but we do have a couple of big companies coming out, like Pepsi and Paychex, Lennar, and so forth, this upcoming week. So keep your eyes on those. All right, now let's go look at some movers and shakers from last week. So the S&P 500, guys, I want to analyze first. So we pulled back. You can see the big black bar on Wednesday, right? That right here. Let's grab a crosshair. Right here, we had this big pullback, right? That was from the economic reports. All over the place, lower volume in the morning, taken off at the end of the day after the report to 2:30 in the afternoon. Flat Thursday with a long wick, long tail up. Flat Friday, small bounce, but we are pinned between the 8 moving average and that 29.1650 level, which is the previous all-time high we had put in, which acted as a major support because of this gap up here last week. We gapped right back down to it again as well, right, on Monday. So major support level that we're playing up against, which is why we still have it in play. All right, so a couple of movers and shakers from last week, guys. Amazon is one of them. You can see the last 5 days, Amazon's had an absolutely amazing move up from where it was. Good recovery, broke the previous high, like it a lot. Booking, same thing. We broke up above the moving averages. Strong move, I think about 40 points for the week. Chipotle just failing right at its moving average. How do we know it happens? Because it happens all the time. We pushed up to the moving average. We don't expect the gap like that to happen all the time, but just they're just a defeated company, guys. I love them as a company, right? But they were at $750 and they can't get out of their own way. They pushed back up over 5 and they're dropping back down again now. Right, then we had Google. Nice strong move. You could see starting on Monday, we had a good strong push up for the week. Goldman Sachs, just the opposite direction, pushing down. Earnings coming up shortly, so keep your eyes on that with them. Netflix, yes, finally broke above. We took a trade in power options plays on this. We're ready out of our first exit on this, and I'm excited about where we're going next. And then we got Tesla. Well, Elon Musk being set up by the SEC for potentially fraud or FTC, whichever one it was, whichever one of the alphabet soup did it to him. and I think they're all in cahoots over it. You know, smoking marijuana on TV, defrauding his customers, asking for more money now on the deposits people have already put down, delaying the delivery, and spending all kinds of money on space travel, on flying cars, and not getting out the products that he's already sold for people. So he's an absolute innovator, and I think it will become devastating to Tesla if it comes to fruition that he cannot ever again be in charge of a publicly traded company. So we'll see where it all plays out. Let's look at a couple of them for this week coming up now. Excuse me. So we got Avago. We're looking for that bounce off of the moving average. 254 is the target. We're looking at Boeing. Strong move. We're getting those higher highs in place now. We are looking at this high right here, the previous high that we've got to violate. If we could break above that. Actually, let's see it here. And we'll scrunch it down. We're looking at about 377 is our upside target there. Facebook, not looking good, baby. 50 million users had their data breached, right? Yet again, it shows putting all of this faith, trust, and belief in a social media company like this that's run by a 28-year-old kid. Sorry, he may be the founder, but he's, in my opinion, not the guy that should be running the company, however old he is. Not the guy that should be running the company. Put it in the hands of someone that knows what they're doing. Now, is that the reason for the data breach? I don't know. I just don't think he knows how to control what's going on there, right? So push down to 160 is our next target, 152 after that. If we break that 159.48, we're moving to that 152 area. And then lastly is Netflix. I still see Netflix as a great opportunity. If you're not in Netflix now, we're looking at about 392 is our next bullish target for Netflix.
I hope this update was helpful, and I would love to hear your feedback in the comments below. And actually, if you want more insights like this, you could just go over to wealthbuildershq.com. I'll post a link to it below. Now, the question of the day is, what stocks are you going to be looking at for next week? Go ahead and let me know in the comments section below. So thank you for checking out this video. Subscribe and ring the bell if you haven't done so yet. And until next time, Wealth Builders HQ is bringing you the best tips and tools for building sustainable wealth in the stock market. Keep crushing it, and we'll talk soon. Take care, folks.